All right. So today we're looking at basically two key things. We are looking at ethics. We are looking at ethics and audit risk. Audit risk. But again, a quick reminder as we discuss this, remember we have discussed some mnemonics. The mnemonics that we shall be remembering. Whenever we are talking about any question to do with audit, there are things you need to talk about for you to be seen to demonstrate both broad and a deep understanding of the subject. These mnemonics include, number one, we have in this case here, if you remember, the data 3, very, very important when you're collecting evidence. Very, very important when you're collecting evidence. So we have in this case, ladies and gentlemen, another one in this case here for substantive procedures, what we call the RAEOU. RAEOU. Do you still remember these things? Do you remember them? Like data 3. Data 3 in this case here, the first one stands for what here? Somebody? Documentations. You can't talk of doing a gathering of evidence without thinking about which relevant documents we shall be working with. Which assets, for example, underlying assets, which assets are we supposed to be checking under this particular what here, this particular audit? You see, asset is just but an example. It could be a liability component you're auditing here, all right? It could be an equity component. For example, you're told in this case you have to go and audit the equity register. Who has brought what to the company? There will be a lot of documents in this case have to be checked there, because if this guy is saying, of course, the first thing I will do is to ask for, in this case here, the owner's register. Who are the owners? Get in this case here, for example, through an inquiries, even talk to these owners. How much do you give? Like we've done this under our and cost several not once, because there will always be disputes like how much did each partner bring on board when the company was starting. So you do in this case here what we call an inquiries and the third-party confirmations from these guys. You start with the CEO, MD, with the other directors, circularize. Let them tell you part of their stories in writing. All right. So in this case here, once they bring these management representations, look at them very well, and then of course now start digging through. How do we check whether this guy brought this amount? He brought this amount, fine. Is it reflected in the bank statement? Well and good. So ask for the bank statements. All right. I mean, there is a lot you'll be able to do there to substantiate, even if it's the equity audit you're doing here. All right. Then we have this D. Of course, D stands for what your directors. This will be very good source for internal evidence. Having in this case your directors are, of course, always asking them questions. And remember, whenever they give you these answers verbally, always at the end of the meeting, request them to document. They must give us written representations. Very, very important. Then, of course, we can't talk about, ladies and gentlemen, gathering evidence in this computerized world without mentioning what here the accountancy systems, the accounting systems. All right. And then, of course, we have here these three. This stands for third party, in this case here, confirmation. So it ties very well with this. Remember, this one is analytical procedures. This is inquiries. We must inspect documents here. We must do observations of activities in action. When you tell us, for example, that at this gate, we have a soldier, if it's a school, who is able, for example, to check receipts of students when they get in, so that they can only allow students who have a fully paid fees to get in. That's very good. So then as an auditor, I will need to one day either pretend to be to be a student. I can have one of my staff members who has never gone to that school issued with a dummy receipt. All right. And then, of course, in this case here, I will be seated somewhere myself as an auditor, watching whether the soldier is really complying with the internal controls of the school. So I'm observing activities in action. When there is any stock take, so in the stock take, then I will have to do some observations there. For example, the stock take instructions have been provided. Are these stock take instructions being followed to the letter? All right. So I have to be observing activities in action. Then we have what we call recalculation. Because auditors, we're supposed to be very skepticism. We're supposed to be doubting everything. When they give you, for example, some computation they have done, then you should tell them, no problem, please give me time, I'll get back to you on the same. So of course, that means you have asked for, like, what are the assumptions of depreciation? Which assets do you have? The initial values, opening balances, you have checked that. Now, once these people are able to give you, in this case here, the required information for purpose of computing the depreciation yourself, then you should take a step further and recompute. Once you recompute, I've gotten 10 million, this guy has got 10.5 million, that difference is immaterial. Remember, as auditors, we only investigate things that are what here material, that can easily make, of course, a decision. Users of the financial statements make different decisions. If the difference is too minimal, then I don't, in this case here, subject that difference to further test, to further investigations like that. Then we have a recalculation. Very, very important. Ladies and gentlemen, like for example, we talk of accounting systems. You know, we are supposed to be really as auditors knowing that in most cases when we get out there, it is either we do a system-based audit, there are others, but in most cases, it is either we do a system-based audit or we do what we call a risk-based audit. A systems-based audit, or we do, in this case here, a risk-based audit. System-based audit is basically like the controls audit. So instead of looking at what is inside really, what are the actual things happening here, first of all, I look at the system that are generating my numbers. All right. So if it's, for example, accounting system, I go through it. Of course, I'll be having my own dummy things. I go through, I test the systems here. Should I realize that these systems, then they're working, then I will be good to go. Of course, it doesn't mean that I will not subject some transactions to some substantive test, but whatever substantive test I will be able to apply now to actual activities in action here will really be minimal. Because I've discovered that my systems are working. If the systems are working, ladies and gentlemen, then I'll be able to do very minimal, very minimal. And when it is system-based, I mean, for the systems that are working, in that case, then the auditor tests will be minimal. When in this case, your systems are not working, now I can decide to get into full substantive tests of what are the details where the systems are not working. Now, ladies and gentlemen, when we go the risk way, so the risk way, first of all, is to ask ourselves, in this case here, what are the risky areas in this business? Risky areas, the ones that are very high risk, then we subject, of course, more substantive tests there. If the risk is too little, then I also subject that to very few audit tests. We shall be looking at that. But one thing I would want to tell you from the word go, you should be knowing that we shall be talking a lot. We will be able to see in your questions. We have in this case here like what we call systems-based audit. We have risk-based audit. Now I'm just giving you an overview. Now, when we talk of these internal controls, I want to test these internal controls before I start in this case here before I know the extent of the tests I'm going to put in. So when I'm testing the controls, as I told you yesterday, remember these controls are supposed to be umbrellas. Umbrellas in this case here that are safeguarding the company's financial statements, the company's books of accounts from being rained on, And the umbrella, if I'm to trust it as an auditor, then this umbrella must be strong enough so that whenever we have winds that are coming, in this case to sweep across, the umbrella is not swept. It has to be very strong to be able to provide a great protective mechanism. It must be very strong. It is this strength that I will start, first of all, by assessing. Because, audit can be very costly. If I decide in this case, like to test all details here, to test all transactions using the substantive procedures, then I will stay there the whole year and probably will not finish. And remember, every hour I'm there with my team, I'm billing. So in this case here, to make this particular entire exercise reasonable, then first of all, we have to test the internal control systems. How strong are they? If they're strong, then I know that my substantive procedures will be, in this case here, at a smaller scale. I don't have to do like, audit everything. In auditing, we don't have like auditing everything. Our work, we simply collect data on a sample basis. Sample basis. It is this sample that we shall be able to do what here? To test. And then, of course, we will be able to make decisions, we'll be able to make an opinion depending on now the evidence that we draw from this sample. And whatever opinion we make now will be covering the entire organization. So to what extent then do we take this sample? We must assess and see how the internal controls are strong. If the internal controls are very strong, trust you me, the tests will be very few, Even the transactions that I will pick will be very few. Then how do we get to tell that for sure these internal control systems are what here? Internal control systems are strong. So if they can only be strong if they are meeting their objectives, and these you should be able to quote in an exam. They can only be strong if they are meeting their objectives. And the internal control systems objectives, in this case here, we use the acronym STOP. 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 Where STOP, if the internal control systems are very strong, then we should be able to get accurate financial statements. Accurate financial statements. If the internal control systems are strong, directors should not be playing around with the assets of the company, because the directors will pick company vehicles, they go with them to Mombasa, and they're not going there for official business. There are others who will even, steal companies, even fuel, things like that. Not even directors alone, even employees. If internal control systems are very good, where, for example, we have said, ladies and gentlemen, that whenever this is to be taken out, there is documentations going out of the gate like that. Whenever these particular internal controls are very strong, then automatically the company's assets will really be safeguarded. So safeguarding of a company's assets. Safeguarding of a company, this is a major objective. A major objective. This normally impresses me. Most of the times whenever I go to audit, because as you guys know, I run an audit firm, timely reports. You go to a company, ask for a report, 1 week down the line, the report is not there. Then that automatically means that the internal control systems are not working. The internal control systems are not working. The internal control systems are not working. They're not working. Otherwise, in this computerized era, if I want, in this case here, a PPE schedule, when I have a serious CFO, they should simply knock on some button, email. I have the entire list of what here, property, plant, and equipment for the company, the depreciations, etc., net book values, carrying amounts, etc., everything should be there. If I get those particular reports on a timely basis, then it means that the internal control systems are strong and I can rely on them. So we have, ladies and gentlemen, this concept of what here, timely reports here. There must be order in the business. Order in the business. Most of African businesses, there is a lot of disorder. There are very few government offices I go to and I get order. Even from the sitting, how the seats have been arranged. Many things, filing systems. And of course, if the filing systems are not in order, things are not in order, the hierarchy, you don't know who reports to, all right? You go in this case here to some other meeting, like I've seen in this case, a lot of casualness, where employees in this case are putting their feet on top of the table. And then they bring bread, in a very, very bad way, they're even putting it on top of the table, and there is a serious audit meeting, entry meeting. No. There must be order in the business. Even ourselves, when we come as the auditor team to meet your personnel who have been charged with the responsibility of, for example, meeting us and giving us whatever information we need to be told, we need to be given a hierarchy. All right? We need to be told, in this case, this is the CEO. When you want accounting, whatever, yeah. And remember, ours is basically all round. If it's procurement, who is in charge of procurement? We don't want to be moving around the organization, knocking, asking, where can I get this document? No. We are coming in the organization in a very orderly way. We know who is the managing partner. We know we shall be able to tell you who does what in our introductions. So we expect a lot of order in your business. If there is a lot of order, then internal control systems are working. Internal control systems are working. If there is a lot of order, then internal control systems are doing what here? They are working. They are working. They are working. Yeah, smooth running of the business. I mean, you'll be able to know companies that are disorderly. These are those companies here when suppliers come for their checks, they're being tossed left, right, and center. That's a disorder. I mean, if you have a supplier payment, order to be followed, right? Then you should be able to follow that thing. All right. And then lastly, we have the concept of what here prevention of fraud and what here prevention of fraud and error. Prevention of fraud and error. Prevention of fraud and error. So it will be very important. I hope you guys have been able to take some note here. This is very, very important. Very, very important. So on that note, if there are people you know will always come in this case and then they start putting their feet on top of tables, please tell them that is what here is all, and we refuse that. We refuse that. We refuse that. Those are just examples to also ensure that you guys are able to see what you're talking about. What you're talking about. Now, ladies and gentlemen, from there in this case here, the other thing that you should always be knowing at this level, these people may want in this case here, you to talk about, in this case here, what we call management assertions. Management assertions, these are key. Management assertions, to assert is to stamp authority. To assert is to be forceful. You put your foot down when you know that you are cheating. So management assertions, ladies and gentlemen, are key. I would expect you guys to be mentioning here. We have in this case here the 𝐴𝐶CA cover, the 𝐴𝐶CA cover. Nowadays I've added one more P, 𝐴𝐶CA cover P, like that. The management assertions. So when these managers give you financial statements, and nowadays they are very well bound. They are called integrated reports, very well bound. If you are not an auditor who knows what skepticism is, you may easily be deluded here. You may easily, in this case here, think that these guys have done the correct thing. But trust you me, most of these assertions are never. So remember, they are asserting that their financial statements are accurate. This is the first thing that they are really chest thumping about. That our financial statements are accurate, that even Mr. Auditor, you know what, you don't even have to look at them so much. You know, I'm able to tell. Then after work around 4 or 5 p.m., because now the directors know that you are around, they are calling you. I mean, have you checked into some hotel? We can book you here in Serena, whatever, like that, bus, etc. So you know straight away, hey, things are not working very well. From day one, whenever I get into a client's premises, day one, I'll be able to know where those guys are doing the right thing or wrong things. The right thing or wrong things. So the first assertion is accuracy. The other assertion is what we call completeness. Completeness. So under completeness, ladies and gentlemen, they're telling you that, you know what, once we have booked those, once we put those things in our income statement, then if it is sales, it is complete. In most cases, it's not complete. Because sales amount to be put in financial statements depends on who those financial statements are being prepared for. If it is KRA, they are preparing those financial statements for. Kala sales katanyongwa. Sales katakuwa complete. Wala kanyonga. Akatakuwa complete. There is one I forgot about I can see guys correcting me there. The last one on the stop. That piece, prevention of errors and what? Frauds. Prevention of errors and frauds. Thank you very much. All right. Then, ladies and gentlemen, in this case here, we have a completeness. We have in this case here what we call cutoff procedures. So in this case here, we have what we call classification. Classification. This is allocation. Allocation. We have what we call occurrence. Occurrence. We have what we call valuation. Evaluation, assertion. We have what we call existence, assertion. Existence, assertion. We have what we call rights and what here? Rights and obligations. Rights and obligations. And then we have in this case here the presentation, assertion. The presentation, assertion. the presentation assertion. Let me know once you guys are able to write those assertions to the end by just mentioning there why for yes, why for yes, why for yes, by mentioning there why for yes. All right. So remember, cutoff, you have to be very, very keen with the cutoff as an auditor. You have to be very keen with the cutoffs as an auditor. When we talk of cutoff, what do we mean? You know, these are those transactions that happen towards the end of the year, towards here. You have to be very, 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 very keen with them. All those transactions that happen, like the last week, like in my farm, we check the last week transactions. Chances are the very last week or even the very last month, depending on your audit procedures, like the December transactions, most of them could be fraudulent. Why? It depends on really the objectives that these directors would want to meet. So for example, if these directors have sales commissions and bonuses they get, bonuses and commissions they get because of a certain sales amount having been met, what they will do, assuming in this case here there is somebody who made even a call around here the last week, they made a call. They said, this is RCM College. We want to procure in this case here these materials and these materials worth 10 million Kenya shillings. We just made a call. We have not in this case here given you an order. There's no invoice that has been raised around here. Nothing really. It was just a mere phone call. And most probably, this particular sale of ours now comes and happens on the 5th of January, 2025. Most probably, now this is when we start documentations. You know, once we make an order, then for sure, you can accrue that amount. If we made an order here, even if the payment was done now later, then justifiably, you'll be able to accrue that amount of the sales of 2024. But you see, this is a situation where we have not given you any order. We simply made a call to your firm. Please, we want to buy this. And because now you want to boost your sales by that 10 million, order in quotes. So what do? They'll simply go ahead and do what here and book this sale in 2024. So in this case here, the cut-off procedures, remember, use cut-off procedures to ensure that transactions of 2024 are booked in 2024. Transactions in 2025 are booked in 2025. So remember, do a lot of cut-off procedures to ensure that, we have been able to put transactions in their correct periods. And these cut-off procedures normally happen here at the end of the year. So you must be very, very careful here with these cut-offs. How did you decide that all these sales, all these purchases, these ones here belong to 2024, and this one here belongs to 2025? And you know, once you get just ask for the orders here, end of the year, orders end of the year, most of them get an order. In this case here, once you see a sale is a bit dubious, what do? Ask the management, in this case here, to give you an explanation in writing. How comes you're booking this sale? And we can see this amount was paid here. We can see the order of RCM is dated 5th of whatever. Why did you put it here? You will see very fast this guy is calling for a meeting to adjust the financial statements. And you see if they call you very fast, but if they agree to adjust the financial statement, then that's very good. Remember, as auditors also, we are not in those old days where our work is simply to just look for errors and report. Sisi watoto tunaenda kushtaki hapana mami huyu amekula sukari. No. If this management is willing to make corrections, well and good. Actually, even towards before we give them an opinion, we shall always give them a letter on matters that they need to address. Matters that they need to address before we give an opinion. Right? We'll tell them we have done this and this and this, and these are the things we expect, or rather we see that are erroneous, which in this case here may affect, which may make us modify the opinion, which may make us give you a bad opinion. Give them a chance to make corrections. Should there be a disagreement, that is when now you go ahead and involve now outsiders, the shareholders, the AGM. So these are very, very important, like allocation, classification, almost are very, very similar. So an allocation classification, normally what we have seen, somebody purchases a motor vehicle. When somebody purchases a motor vehicle, if they would want to push up their purchases, They want to increase their cost of sales. So instead of pushing this vehicle to property, plant, and equipment, they will come and book it under purchases. Wrong classification. Wrong classification. As an auditor, I should be aware that classification of items normally is never done very well. What these guys are trying to imply in their assertion is that they have done the correct things, but in most cases, they haven't done the correct things. So I must ask in this case here in the year, what were the additions in PPE? So they'll give you information like that verbally. Vehicles, write them down. KAD, etc. And when I ask in this case here now for the written representation and the PPE register, I'll be able to see this particular vehicle they told me KDA has not been booked here. So then I'll try to trace where did it go to. Most likely I'll get this thing in purchases. At times in this case here, we have seen situations where directors sell PPEs and then they book this under sales. They book this under sales. So if there is a disposal, I must be able to follow through to see how the disposal of this motor vehicle has been accounted for, including how they arrived at the profit stroke loss on disposal. Profit or loss on disposal. Profit or loss on disposal. So we have in this case, ladies and gentlemen, allocation is in most cases for overheads. We get like now overheads. The common expenses, they are not apportioned very well. So we must ask for the criteria of apportioning. We must ask for that criteria. Now we have in this case here occurrence. They are telling us that whatever you were seeing there in the financial statements indeed occurred. We know there are people who do dubious things. There are people who do bad things. Even things that never occurred, they will go and get receipts from supermarkets and they start, in this case here, stuffing them in. Thanks to e-teams, such things will never be there in the future. Yeah, e-teams will be solving most of those things where people used to bring in fake receipts and people have done crazy things. I even wonder how we've managed so far to run a country. All right. So in this case here, that everything you're seeing there occurred, I have to test occurrence very well to the end. Then we have in this case existence. They exist. I mean, there are so many things, ladies and gentlemen. In this case here that, they will tell you that this vehicle exists. That's on paper. But when you tell them that now let's do like a physical count, bring those things here we count, like county governments. Like right now we are doing for one county, what we call asset tagging. And of course, with other partners who are doing what evaluation. When you ask for this thing, you'll be taken round and round and round. It is a big problem in our counties. Big problem in our counties. They'll tell you that there is like one we did. They'll tell you that there is this asset. They tell you that there's an asset, you go with them. And then you get this is an asset that was closed up in some room. Hata imekuliwa kabisa na wadudu. Hata wenyewe wanajua. And then the back of their minds have always been knowing that that asset is very, very safe. There are many issues at the county, national governments, international disaster. Of course, they're telling us that the staff have been valued properly. In most cases, they haven't been valued properly. So here, because I may not be an expert, I must bring in a valuer. I must engage expert services of a valuer. That's the language I want to hear you guys using here. Rights and obligations, these are about documentations. You are telling us that you've got a right to a motor vehicle. Do you have, in this case here, a logbook? And this logbook, once I get, remember I'm using the data 3. I have to confirm, in this case, that's a document. I have to confirm its authenticity, its genuineness. All right? I have to involve third parties here. All right? So we have rights and obligations. Obligations, for example, if it is bonds, right? And you have debts here. We have to look at, like now, the obligations that Kenya has. We can't even quantify them very well. And if you're able to quantify them, there are so many things we're told in this case that this money came, it never went to the exchequer's accounts, it went to some accounts foreign. It becomes very, very hard. So obligations, we have to doubt this. They're telling us that these are obligations, but we must do some tests. Assertions, we must do some tests to see whether this is really holding. And we have lastly, the concept of presentation, very, very similar to allocations and OTR, cut off in the financial statement that they have been presented clearly and that there are enough OTR disclosed, there are enough disclosures. So these are very, very, very important. Ladies and gentlemen, now we want to go to our past papers, unless there is a question from your side. Unless there is a question from your side, I would like to go to our past papers. And before I go to our past papers, so before I go to our past papers, there is this book which I need to also give it to you. I need to give you these materials. I need to give you these materials. They are very nice. I mean, very nice. There are things that I'll be using today, which I would want you guys to be aware of. To be aware of. All right, so ladies and gentlemen. All right, so then this is what we have here. I want to share this with you. All right, so in this case, ladies and gentlemen, we have here, of course, ACC and ISPAC, they really work together. We get that these standards are what here, they are the same, The standards are the same. So where you are seeing ACCA, we shall be reading what here? ISPAC. We shall be reading ISPAC. We shall be reading ISPAC. So ACCA Code of Ethics and Conduct. That's ISPAC's Code of Ethics and what here? Conduct. So the user needs to believe that assurance practitioners act in accordance with a code of ethics. And the practitioner needs a code of ethics to make sure that he or she is worthy that level of trust. Remember, but before I go there, let's come back here, the sources. ACCA or ISPA Code of Ethics and Conduct. We have in this case here, International Code for Professional Accountants, similar conceptual frameworks, contents, very important, fundamental principles of ethical behavior, potential threats to ethical behavior, possible safeguards, which can be implemented to counter the threats. You must have seen in your exams, the examiner is asking about possible safeguards. So remember, the Code of Ethics provides just guidance that the auditor must follow. In some cases, the only viable safeguard is not to accept an assurance and engagement. The only viable safeguard is not to accept an assurance engagement or to resign from it. Ladies and gentlemen, I can tell you this for sure. One of the fine days you'll be getting yourself, of course, having this license of audit, you're out there. And some of the audit engagements that will be juicy to you are ones where you will go and get directors telling you that we have a money laundering issue that is being investigated by who? Financial reporting agencies. The moment you hear that language, not unless in this case here you are, there are people who will always tell me, there are people I've met, I normally meet very many people, say on even a weekly basis, monthly basis. There are people who do not fear. But mwalimu me, even if I get 50 million, that will jail me, there is no problem. But if you have got a reputation to protect, there are those things of management integrity. Once you hear them from the word go, you are better off in this case here just, refusing that kind of engagement here. Or if you are already in it, resign. So ISPAC reserves the right to discipline members who infringe the rules through a process of disciplinary hearings. Now, ladies and gentlemen, these are things that you guys have heard before. Like, for example, we have what we call independence and objectivity. Basically, one should be independence and objectivity. Independence is freedom from any external control or influence in making decisions. Objectivity is a state of mind which has regard to all considerations relevant to the task in hand, but no other. And normally, in this case here, we normally put these together. We normally put this together, independence and objectivity. Ladies and gentlemen, at the end of the day, I would want whatever opinion I arrive at to be very, very objective. No internal or external interferences For example, you're told to go and say this, and you say that has been given to you, then automatically we say that you are not independent. You're independent. Now, you progress. Fundamental principles, threats, and safeguards. So the fundamental principles, what we call the ethical standards. Ethical standards. We have number one, a standard on integrity. We have objectivity or independence. We have professional competence and a due care. Confidentiality, and then we have professional behavior. These five, you must recite them before your exams. You must be remembering what we call the ethical, the ethical standards. They're normally five. And the integrity, as auditors, we shall be straightforward. We shall be open. We shall not be coming to meetings with some cards under the table. We shall be objective as much as possible, and for this to happen, then we shall be independent. Professional competence, when you are called upon, for example, somebody calls you and tells you that now this is Kenya Airways, please come tomorrow. Would want in this case to give you some work. So you realize that these ninjas are telling you to go and participate in valuation of aeroplanes. Are you really competent on that field? No. So then to safeguard, of course, here, perhaps you may want to work with an expert. That is allowed. So as you shall be seeing under competence, we need you as well to be training continuously. That is why ISPAC does what we call continuous professional development trainings, because things are changing. Like, look, high heavens, look at our taxes. If you don't keep on studying that throughout, you'll be thrown off the dustbins. So for you to be competent, there's a lot of reading to be done throughout. Professional development shall continue throughout. And then we have the concept of due care. We can only say that you are caring of your clients if this person called the auditor is good in standards. You are able to follow due processes. It coming in this case here up with your opinion. So if, for example, we have tax laws, and here you are advising somebody to pay tax of 100 million, and yet this guy ought to have paid 20. Look at that loss. You can be taken to court because you are not caring. And when you are taken to court, then it can only be good of you to say, fine, I took care of this person, I did my work diligently, if you have proper documents, which shows that you are able to follow laws, rules, international standards, IFRS, standards on auditing. Ladies and gentlemen, and this is where most of us really don't make very good auditors, the concept of confidentiality. Please, when you walk out of any auditing meeting or exercise, and perhaps you are in some club, some bar, in this case here, you are imbibing something here, which is quite far in terms of tastes. It doesn't taste close to water or soda, all right? Don't be that kind of a mouthy auditor. Auditors, we must be people of high secrecy. Don't discuss things even with your spouses, things about your audit clients. Because if you do that, that will lead to what we call, insider trading. May lead to what we call insider trading. You want to tell your wife, you know what? Hey, we are auditing this company. Hey, and the kind of profits these guys have, made. When those profits, in this case, will be declared, you say in 3 months' time after we finish our report, then automatically the whole republic will be happy, the share price will go up. And then this great lady, because now she's wise, she goes and buys shares. That's insider trading. It just come as a result of what here? Are you not being confidential? We shall be very confidential, and should we need to give any information outside there, then we must have express authority of the client. Express authority of the client. Or it must be a matter that I'm bringing out there due to public interest. You can imagine. For example, I've come to audit your firm, ABC. I've come to audit your firm, ABC. And then I realize that amongst your many activities that you have told me that you are doing, one of them is terrorism. I should be able to run out of that place assuming that I will be well within my skin, to the nearest police station. Yeah, I cannot really talk about secrecy, because this guy, when they will just throw their bombs left, right, and center, yeah, then if it's anything that is of public interest, then that one, the law will protect me. I'll be like a whistleblower. Auditors in this case here, we are also required here to be whistleblowers, but we must follow the law. We must follow the law. But when I will get you, for example, you're an auditor, and this is something I've seen in this case here, especially the auditors, I can call them auditors in quotes, who are not qualified. So you go and work on a client, a few things here on a client, and then you realize that this client has not been paying taxes very well. And then what do? You go and whistleblow at KRA. You go and whistleblow at KRA. No. You are there to help these guys here correct the mess. So if they have not been filing their returns very well, they've not been paying their taxes very well, you do a management letter. Try to tell them that, you know what, like now we expect a tax amnesty, another tax amnesty will be coming before the year end. Let's take advantage of this tax amnesty, get a payment plan, and then we move on. But this thing, again, of taking advantage of your clients' confidential data to get some extra incomes, for example, when these guys will be squeezed by carry, you know that we get more jobs. No. Then lastly, we have what we call professional behavior. Ladies and gentlemen, all of us were required to behave in a way that gives credit to 𝐨𝐼R, in a way that gives credit to our profession. If, for example, you remember this case of this ACCA guy in Zambia, this guy has drunk himself silly and was wearing an ACCA red tag. And then, of course, after drinking 1, 2, 3, more than one, of course, this guy now became too drunk and he was now down there on the streets. Down. I mean, it was a ditch full of water, and then people were able to, rescue him, and they took photos of him. He's a member of ACCA. So, ladies and gentlemen, in this case here, people will start saying that these are how accountants behave. We should never hear, remember, this professional behavior goes beyond money. When we hear that an accountant has raped, you're a disgrace to our community of accountants. All right. And once we get that, then we should be able to strike you off the register of accountants. This is a prestigious profession. We want to safeguard it totally. So the threats to independence, I know you guys know these threats to independence by the acronym SAFIS, self-interest, self-review, advocacy, familiarity. Then we have what we call intimidation. Some of the safeguards I would expect you guys to be talking about. Number one is segregation of duties. You see, segregation is the opposite of aggregation. Segregation is the opposite of aggregation. So under segregation, we should be able to divide one job. All right. Don't have like one person doing everything from authorization, execution. No, we should be able to divide jobs in this case among many people, so that these many people will not sit down and conspire. Conspiracy theory goes down when you involve many people. Safeguard, you have to talk about review. You have to talk about rotation, especially of the management partners. Management partners in this engagement team. If this guy, for example, has done his 3 years at ABC, the next cycle, we should have a new partner. Then we have a safeguard when things become increases, decreases. When things are very, very hard, you cease to act. Then we have the concept of separate teams. Separate teams, we normally say, have a separate team for audit, another team, for example, for taxation, and then you build a Chinese wall. I hope you guys know what a Chinese wall is. They are very, very tall. Nobody can see what is happening on the other teams. You can't climb up a Chinese wall. Trust you me, you'll fall down miserably. Chinese walls, and go and do your research, just like pyramid in Egypt, they're very, very tall. So you build so you have in this case a separate teams for separate engagements and ensure that you have a very tall wall. And then we have an engagement quality reviews. We shall be having in this case here peer reviews. We shall be having our own quality reviews internally to ensure that things are done properly. I can see charts here, just a moment. Yeah, Chinese walls. Great. Great. Thank you very much. So this is very, very important in your exams, ladies and gentlemen. And we are told here that the auditor must identify the threats, assess the significance of the threats, and apply safeguards to reduce or eliminate threats. Fundamental principles, I don't think I need to discuss this really, or I can just read at a high level. So the court identifies 5 fundamental principles in professional conduct, what we call the ethical standards, not threats, but ethical standards. Integrity members should be straightforward and honest in all professional and business relationships. Objectivity, members must exercise professional or business judgment without being compromised by bias, conflicts of interest, or undue influence of or undue reliance on individuals, organizations, technology, and other factors. We must be objective. What has taken us to this particular audit is to gather evidence, is to gather enough evidence, sufficient appropriate audit evidence to be able to give an opinion. So anything that may impair objectivity, like right now we are seeing young auditors who are very stupid. Sorry for using that term. Unakuta these are young auditor, mtuma kwa kazi, kesho kimuona unamuona kana msichana mahali kwa kaobe. Amuuliza wewe sasa, huyu ni nani? Atu ni accountant wa ile. Halala. Huyo sasa tunamtoa katika engagement team. Auditors wa size wamekuwa fake sana. Wanakuwa fake sana. Inakuwa mbaya. You lack of, you're compromising your objectivity. All right? And that is why familiarity is very bad. That is why, especially now, these young men, we should have, there should be a lot of rotation here. All right? There should be a lot of rotation here. Objectivity. What do you mean an opportunity? Not in audit and you're making friends. What do you mean? No. Not when you're auditing. When you're auditing, the words will be up. So then we have professional competence and due care. A professional accountant must attain and maintain professional knowledge and skill at the level required to ensure that a client or employer receives a competent professional service. Then confidentiality, members should respect the confidentiality of information acquired as a result of professional and business relationships, and they should not disclose any such information to a third party without proper and specific authority, or unless there is a legal. If it's a court order, then you have to give information. There's a legal or a professional right or duty to disclose. Professional behavior, members must comply with relevant laws and regulations. Behave in a manner consistent with the profession's responsibility to act in the public interest in all professional activities and business relationships, and avoid any conduct that might discredit the profession. So I think at this level, we should be able to go to our past papers, although this is very important for your exam, like an example of threats. Auditor owns shares in the client, self-interest, safeguard, sell all the shares. Auditor is unduly dependent on client for fees. If you have like one client, you're getting like 20% of your total income from. Remember, maximum is 15. Even nowadays, 15 is too high. When you have a client, one client like who is the elephant, the others are, in this case here, like hyenas around, the very small ones, but one who is an elephant in the room, contributing a significant amount of your audit fees. And so this guy is giving you 10 million, others are giving you like 2 million, 3 million. So you can see 10 million out of the total. If that 10 million out of the total is more than 15%, then there is undue dependence of that guy. So that guy passes around, you have to stand up and throw a very big salute. That means what year you are compromised. Fees from a listed client should not exceed 15% of the firm's fee. We should just work with this 15%. Ourselves should work with 15%. Should exceed. Significant outstanding fees due from the client. You should never allow, like I've seen some people, they have audited a client. So in this case here, you have 300,000 as the fees for the year. And then you're leaving behind that fees for say 2-3 months. No, audit fees should be paid promptly. So when you're raising an invoice, you should be able to just take down that you expect you to pay within 30 days, and that should have been agreed in the engagement letter. Arrange full or partial payment do not issue auditor's report until fees has been paid. Clients request contingent fee that, for example, we shall pay this amount if this happens. Self-interest, refuse. Contingent fees are not acceptable for assurance engagements. Gifts or hospitality, that person wants to buy you lunch. Hapo kuna ka interest wewe, ka self-interest. Na mtazoeana sana. And yet remember an auditor, as much as we are saying that, we need to be close nowadays, but professional closeness, we have to really guard our objectivity. Do not accept unless clearly trivial. Audit partner must authorize acceptance. And I want to write this. The audit partner must authorize acceptance. So if, for example, I'm coming to office to audit, and then the other guys, for example, are only having like tea only at 10 o'clock. Wanakuja tu chai chata cha ingine hafifu hata ina maziwa ya kutosha. But wewe ikifika 10 o'clock unapata chai, hapa kuna keki kidogo iko sausages. Hizo zote ni undue or why are they being too nice to you? You should be able to see around. After all, whatever you're consuming in this office, ladies and gentlemen, in the audit teams, we need to discuss about that. Because even as an auditor, you can also be killed. You can be killed. If I'm running around the call, I should be able to provide my own tea to my staff. I should be able to subcontract a hotel there or somewhere, something like that, to bring my people. Why should I take tea in a company that I'm auditing? No. So audit partner has been in the post for many years. Familiarity. In Kenya, of course, there is no problem. You can even be in one audit assignment as a managing partner, even 15 years, even 20 years. But outside there is maximum 3 years. But the very best, we should always exercise what we call partner rotation. In America, it is 3 years. Other guys will talk about 7 years, which can be extended for 1 year if audit committee approves. So these are things you guys can read. For me, ladies and gentlemen, I would want to go to the past papers now. So these are things you can read on your own. But perhaps what I could do here, they are summarized. They're pocket friendly. They're really summarized. The other thing that I would want to bring to your attention as I get into this is risk. So remember audit risk definition. The risk of issuing an inappropriate audit opinion. This is the risk that you will tell the public outside here that the financial statements of the client portray a true and fair view. And of course, the truth is they do not portray. Audit risk has got 3 elements. We have what we call inherent risk, we have control risk, we have detection risk. Inherent risk, for example, when you go to audit a bank, a bank, a bank, in this case here, there is an inherent risk there that they're dealing with money. So there is a high risk that things may not be right there. Because everybody want to steal. So there's a stability of a balanced misstatement before consideration of controls. Even if you put whatever controls there is, and gentlemen, we have what we call an inherent risk. The risk which is associated with the kind of business I'm auditing. There are businesses which are inherently risky given the kind of things that they are doing. Control risk is the risk that the client's controls fail to prevent and detect misstatement. Hapo iko mtu kwa kiniambia example mzuri ya control risk, like unapata mama ameweka ile safeguard zote lakini bado unapata mambo imeingia, unakubali tu. So control risk in this case is the risk that the client's controls, you put in controls, but in this case here that may not prevent errors 100%. So the risk that the client's controls fail to prevent and detect misstatement. And then of course as an auditor you come in and put also your detectors. Wewe unaweka mitego kama ile ya Gachagua. Unasema mzee tunakuonea hole number 18 hautaingia. But you see those mitego umeweka, they may not be foolproof. The risk that the auditor fails also to detect material what here misstatement. Please listen, when we talk of inherent risk here, Example, inherent risk, higher risk. A client is in a very volatile industry, rapidly changing technology, complex accounting treatment, like the question that came to you guys about derivatives. Those are inherently risky businesses. We are running a derivatives business, right? Control risk. We have here higher risk, old or ineffective, for example, accounting software. Accounting software is a form of internal control system. If it's old, if it's ineffective, then automatically mambo itakuwa mbaya. Lack of segregation of accounting duties. You've done segregation, all right? You thought it is very, very good, but at times that may not be enough. You have it, actually, you have done these authorizations here, but they're not working. They may not work. All right. For detection risk, the auditors, detectors are not working. Where the auditors, detectors are not working. Example, there's a higher risk when you're using inappropriate procedures or when you're misinterpreting results. So this materiality is something I will be able to take a whole lesson and discuss with you. But for today, I would want us to just end it there. And I would want you to use these materials. These materials are very, very good. You can now imagine like the whole materiality I'm only discussing in one page, size, nature. We'll be able to tell you like that, those percentages, 1%, 0.5%, etc. We'll be able to discuss about that very, very well. These are very, very good book. All right. So we shall be able to go to our past papers directly. We shall be able to go to our past papers. Yeah, I'll share this. I'll share this. We shall overcome. So when you remember, in this case here, Gashag was detectors and the preventers. They never worked. Then you remember the detection risk. As an auditor, your detectors may not work 100%. All right, so we shall start right away with question number 1. And this is basically topic 3. I want to do 2 topics today. 2 topics today. May God help me. April 2024, question number 4B. April 2024, question number 4B. Once you get it, ladies and gentlemen, you should be able to put up your hand. April 2024, question number 4B. And then I expect you guys to really participate here. April 2024, question number 4B. Just one line. This is very, very popular in your exams. One line. This is what led to auditing firms like my firm, 𝐨𝐼R𝐼 company, to go for indemnity insurance. Indemnity insurance, because currently, really, auditors are being taken to court like crazy. So after I've gotten the question, yes, I can see here. Yeah, 10 marks here. Yes. 10 marks, yes. 10 marks. Discuss 5 factors that might have stable. So then what I'll do is to close the video. All right, so I'm waiting for your points. As I organize myself, I'm waiting for your points. So what are the factors that are leading to increased litigation against auditors? And I would want you to remember the case of PwC, all right, versus the shareholders of Uchumi Supermarket, all right? Remember PwC gave a clean bill of health. They gave the company, in this case here, unqualified opinion, and then 3 months down the line, the company could not pay salaries. The company could not do nothing, not even rent. In that case, ladies and gentlemen, I mean, these guys felt like the auditors gave a bad opinion. Auditors cheated them. There are some shareholders who bought shares, I mean, on the basis of what here, the advisory, they call them advisory. Of course, to us, not advisory, to us, it's an opinion, but them, they see that as an advisory. On the advisory of the opinion given by PwC. So then they took these guys to court. All right. Although in this case here, PwC won at the end of the day, but I mean, we have so many even small firms that are being taken to court nowadays. Why is that the case? Ladies and gentlemen, the first factor that I would always want you to quote is this one of higher expectations from stakeholders. Stakeholders are expecting too much from us. There is what we call expectations gap. When we have issued a special and qualified opinion, stakeholders think that, for example, the company should not be having a tax matter. So higher expectations from stakeholders. So at the end of the day, it's basically misconception. They're not perceiving us correctly. So they think that our biggest role is detection of frauds and what are errors. Detection of frauds and errors. So then should we issue unqualified opinion, and then there is a fraud in the company? Amongst people, look at most of these judgments, not judgments, but court papers. You will see in this case here, like the shareholders are taking, in this case here, the directors. You see, first respondent, director 1, director 2. 10th respondent, auditing company, out on the court. And yet our work is supposed to be, first of all, on sampling basis. I'm not having a primary duty of detecting frauds and errors. That's not my primary. It comes as a secondary. It's by the way. Mine is to issue an opinion. But this is one of the reasons why, ladies and gentlemen, companies are being taken, audit companies, audit firms are being taken to courts every day. Thank you so much. I can see very good points here. I can see very, very good points here. So like we have in this case here, complex accounting systems of the clients. But the clients in this case are coming up with very sophisticated accounting systems. And auditors are not able to even, test. And because all of us, we want jobs, we don't want to say that we are incompetent and decline the assignment. So we take up the assignment and yet we can't follow through the system. So we end up giving, in this case here, the wrong opinion. Next time we are taken, in this case here, to court. Yeah, for example, we have these complex accounting standards. Like now they have just given us what we call IFRS 17, that is just 1 year old, which is, in this case here, accounting for insurance companies. I mean, when I go through this standard, it's very complicated. That's why personally I would want to audit any insurance company, not unless I build up that competence within the firm. It requires a lot of actuarial estimations. So you go there, you issue an opinion, unqualified opinion, and then at the end of the day, we'll have, in this case here, these ninjas called even directors or whatever. Later on, you'll be taken to court. You'll be taken to court. Yeah, then we have changing legal environment. We have a lot of legal reforms now. Legal reforms and the court decisions have expanded auditors' liability. Legal reforms and the court decisions have expanded auditors' liability and they made it easier for claimants to sue auditors for negligence. Remember, initially, you could simply go to court when you were being taken to court. You could easily go to court and say that I had issued a disclaimer. That go to my opinion down there was a disclaimer. Nowadays, even if there is a disclaimer, where you're trying to say that don't rely on my opinion to make no, those things are no. The courts in this case will lift that veil. Will tell you no, let's look at what you did. Let's look at what you did. Let's look at what you did. Yeah, I like this, like the concept of what here, more information being available about auditors' responsibility. You know, initially like these 𝐂𝐸 factories, most of them, they never knew. Nowadays, I mean, there's a lot of information. There's a lot of information. A lot of information is available. Also, ladies and gentlemen, whether you like it or not, we have also become so greedy as auditors. In most cases here, would want, in this case here, to eat something from these organizations. So we become party to malpractices in the company. So the cases of malpractices in these companies where auditors are involved, they're increasing by the day. They're increasing by the day. They're increasing by the day. So that is the concept of what here? Self-interest. The concept of this self-interest is taking many auditing firms to courts, where you go and start doing tax as well, on behalf of your client. And then you get into a very serious tax dispute. Who did this taxation? So 𝐂�RA is there. When 𝐂�RA is being taken to court, your name will also be annexed there. So this self-interest, you get into an organization and then they want to put you like a manager. You are up there, you are attending interviews of senior management, etc. and here because you want money. You are seeing how this money is coming. Every time you're invoicing, you will get yourself in court. You'll get yourself in court. And then, ladies and gentlemen, we can also take this as a very good reason why companies are being taken to court. We have the concept of economic downturns, economic depressions globally. So when economies are depressed, companies would always want to fake profits. There is a lot of creative accounting going on. A lot of creative accounting going on. And with creative accounting, of course, you'll always get yourself where? You'll always get yourself into problems. Because you're not able to take some of those things. When the economy is depressed, chances are most of these companies that you're dealing with, they would also want to get into some money laundering activities. They would want to bribe for orders. All right? Once in this case here you are in it, automatically you'll get yourself in this case here bruised with a court order. With a court order. So suppose I use surface. You use surface fine, but I mean, like now I'm discussing self-interest. But you have to really do what here? You have to really try to justify, but like if it's advocacy, right? For example, where you go and present, for example, a case for your client in a bank. And of course, in this case, you're saying that this guy is as white as a saint. Give him the money, and then the guy goes under. When the bank, of course, will take this client of yours to court, chances are you will be there as an auditor. High chances are. And that is why you can see people saying that the concept of availability of what here, a lot of information. When that bank, initially that bank will not think of, the bank will be able to do due diligence. Who was this person who came to represent this client? So who is he? Is their auditor. Like that. I forgot one thing, ladies and gentlemen. Also, in this case here, whenever the economy is depressed, normally companies will look for a way of getting some extra income. And because there is notion outside here that auditors have got deep pockets, what we call the deepening pockets theory. Like this big four, I mean, they're big. So the moment in this case here, they perceive you to be like that, they want to get to squeeze something out of you. You get a few people, in this case, you're taking it to court. Yeah, like a high technology advancement, I like that. Whatever point you raise, ladies and gentlemen, so long as you're able to defend it somehow, then you'll be able to get something there. And I'll be touching later on what we call the indemnity, which is very, very good surrounding this. So then, with your permission, ladies and gentlemen, we said we want many questions today. I would want us to look at September 2021, question number 1C. September 2021, question number 1C, and just extracting what is relevant to ethics. September 2021, question number 1 𝐶𝐿. September 2021, question number 1 𝐶𝐿. You shall be fast in looking for questions. You shall be very fast. And you shall be able to give me a thumbs up. Thank you very much. This ninja is telling me that Mwalimu, you can become a very good public speaker. I think that's the second student who is telling me that. Then I should be able to practice even more and become one, because I don't think so. But thank you. September 2021, question number 1C. Oh, you are one already? I'm one already. Great, thank you. I'll work harder. So September 2021, question number 1C, you start by reading the requirement. So explore the ethical and the other professional issues raised by the above matter and indicate the action, if any, that your firm should now undertake. So many questions in one. You explore the ethical and the other professional issues raised by the above matter and indicate, explore the ethical and the other professional issues raised by above matter and indicate the action, if any, that your firm should now take. You are a senior audit manager in M&M Associates CPA. Recently, you were assigned specific responsibility for undertaking annual reviews of existing clients. The following situation has arisen in connection with one of the clients, Reward Limited, an exporter of specialist equipment. The CEO of Reward Limited has requested for advice on the accounting treatment and disclosure of payments being made for security consultancy services. Remember, you are the auditor. And now, in this case here, ladies and gentlemen, you are being given an audit services. This is an audit service. So because they have asked about ethics, so I'm now thinking, I told you about how to scatter around a question. So in this case here, I'm looking at things like, if it's an audit service I'm being given, number one, do I have the competence? Do I have the competence? If I don't have the competence, can I be able to get an expert person, expert firm that I can partner with to do this job? If no, the action will be decline. As we talk about non-assurance services, non-audit services, I must always be having it at the back of my mind that we have this concept of what here? We have this concept of self-interest, because I'll start drawing lots of income from one client. ISPAC will not agree that. All right. So we have in this case here self-interest. So if it is self-interest, how will I be able to handle now this? What action will I be able to take? Of course, I have to assess what is the total income going to come from this farm. When I see that it is going to be more than 15%, there's no safeguard there. Or rather, there's a safeguard. I remember there's a safeguard. So when I see, for example, this particular job will give me lots of income, and perhaps it will give me even lots of income compared to what audit, then I can resign as an auditor and then I take up this work if the directors will accept. That's a very good safeguard, because you see, in an audit services, I will not have a maximum of 15%. All right. Then, of course, at the end of the day, whenever you hear of non-audit services, always think about self-review. This is an audit. I can see a possibility of advocacy. They're telling me to come and do what here, do compete. At the end of the day, as I'm doing this, I'll be meeting some parties out there. It could be a bank, for example. This guy wants a loan. I'm going to say, you know what? This guy is as white as an angel, as white as snow. So I'm advocating their interests. At the end of the day, this could backfire. All right. Of course, like now, an audit service says safeguards, ensure that we have separate teams for this audit and the other engagement. Separate teams, and don't forget to mention building up of a tall Chinese wall so that those particular teams will not be able to communicate. Let me read the question. I'm just trying to think around. I mean, you know, audit, I'm so sure so many guys get what we call a mental block. I've been having invigilated exams for so long. And I normally see students, in this case here, ladies and gentlemen, these students are able to read a question like even 10 times and they're not able to generate even one answer. And I know why, because of mental block. So the Chief Executive Officer of Reward Limited has requested for advice on the accounting treatment and disclosure of payments being made for security consultant services. The payments which aim to ensure that consignments are not impounded in the destination country. I know your English is equally good. You know the concept of impounded. But there are payments which are being done so that when these things come in customs, they're not taken away. So I can see something illegal there. I can see some laws not being followed there. I'll be able to take this token being given out there for goods not to be impounded as what here as a bribe. Is there somebody who is able to see a bribe there? Is there somebody who is able to see a bribe there? Yeah, because if you are putting in some money so that your goods can't be impounded, I mean, what is that? There's a bribe there. The payments, which aim to ensure that consignments are not impounded in the destination country of a major customer, may be material to the financial statements for the year ending 31st December 2021. The Reward Limited does not treat these payments as tax deductible. You can see even I mean, if this payment was genuine, why are you not booking them in your income statement? You know, in the income statement, you can't say bribe. You can't say bribe. So there is some concealment there. So these managers have some integrity issues. All right. So they want me to explore the ethical and other professional issues raised by the above matter and indicate the action, if any, that your firm should now take. So yeah, even money laundering, yes, even money laundering. Because bribery and money laundering, you know, bribe is dirty money. It's dirty money, which will be clean like. So money laundering is there. So ladies and gentlemen, in the interest of time, because I know you have another class, could we kindly move very fast in this question? Tell me in this case here, what are some of the key points then, now that you've scattered around, what are the key points in this case that you would have brought in? So remember, ethically, listen, ethically, you have to remember those ethical standards. Ethical standards. When you're answering this kind of a question, you must remember the ethical standards. So number one, we have the concept of integrity. Number two, we have the concept of objectivity. Number three, we have the concept of confidentiality. Number four, we have what we call professional behavior. Number five, we have what we call professional competence and due care. So as I'm discussing this, I'll always be mentioning those words. You don't have to cram them. No, you don't have to cram them at all. So for example, under integrity, I'm able to identify an ethical standard there. And the issue is that, first of all, this is corruption. This corruption and integrity. Remember, we as accountants are supposed to be straightforward. So in this case, ladies and gentlemen, then we will need to discuss with these people. Once, first of all, we realize that these are not men and women of high integrity, then automatically there is an issue that they're not straightforward, they're doing bad underdealings, that at the end of the day, we'll get ourselves into problems. So in this case here, under integrity issues, the very best thing you will do is to decline that assignment right away. That is the action. You decline that assignment right away because it will put me under integrity issues myself. And remember, as I decline, now there is more information coming about these guys not being men and women of high integrity. So it means that even this decision could affect my auditing work. So under integrity, I would want, this audit, if you want to pass audit round 1, you must be a student of stories. You even cook some of them, you write, because we want you to be verbose. We want you to be verbose. You must be using, in this case here, lots of, not that like many verbs or many jargons, but you must write. You must write. So, ladies and gentlemen, under objectivity. Objectivity, of course, we're looking at independence. Those threats to independence are the ones now you discuss there. So threats to independence, of course, like now here, I can see a self-interest because I can see more work coming. I can see self-review the threat because I can see this more work. Of course, at the end of the day, I'll be reviewing this thing and they'll be told that it's material, the financial statements. So they'll be able to, raise so many things there. Advocacy, because you see more work means that you'll be defending this guy. More work means that you'll be staying in the company for so long. Familiarity. Familiarity. Yeah, like over dependence on one client in case the fees is more than 15%. Thank you very much, Bree. Objective was audit, but now it's changing to consultancy. Is it changing? No. Remember, this additional work. This has requested for advice on the accounting treatment. And they're not telling you to resign as the auditor. They're not telling you to resign as the auditor. This is an additional job. Read very well. An additional job, read very well. Now, ladies and gentlemen, this will really screw up my confidentiality with this client. Because I can see there are bad things happening here. There are now laws being broken up here. If I get myself into this thing, then chances are I will go to discuss, because I can see bad things coming here, right? Because you'll go and in this case, you do what here, advise, because you've seen money there. Also, you're going to get lots of money because it's corruption money. At the end of the day, this may end out there to third parties. Like now, what is happening with Livondo? Livondo opened a company. They have done, in this case, something in Zambia. Now we are being told that if there was an auditor there, I'm telling you, it is an international disaster. So now you'll be in the media being asked, please comment about this. So I can see confidentiality here may not apply very well. So I'm better off in this case here is resigning this. Not resigning from the audit. The auditor have to consider so many things, but at least in this case you're saying, no, declining this job. Intimidation. It's all about how you bring this thing up. Because once you get into this engagement where there's corruption, once you have known, then you start getting even crazy messages from these directors that, you know what, if you tell anybody about this. So these are bad engagement. Where there is money laundering, where there is corruption, you should be talking about the best thing to do is to reject, decline the offer. Decline the offer. All right. Now from there, of course, we are discussing about integrity. Now we are through about objectivity. We are through about confidentiality. Ladies and gentlemen, then we have professional competence. You have to ask yourself, what do these guys want me to do? I can see there is even a different country being involved. Am I competent enough to even look at this matter? Because for sure in that country, perhaps this, what they're calling bribery here, perhaps in that country, it could be something good. All right. So am I competent enough? Of course, if I'm not competent enough, the safeguards will be, number one, for example, partner with a local person in that country. All right. Or I decline because I don't have that expertise. I don't have that expertise. All right. So professional competence. And then we have, ladies and gentlemen, professional competence and due care. Due care basically, is all about you being competent. If you're not competent, you'll not be able to take you. Just write to this guy. Respectively, I will not be able to accept this job simply because I don't have adequate skills on that line. On that line. Now, ladies and gentlemen, from there, we'll be able to talk about professional behavior. Remember, this is about theft. At the end of the day, when you are smoked out, you will be able to discredit the profession. You'll be able to discredit the profession. So I'll be able to read something, ladies and gentlemen, here. They are declining the additional work years. So association should consider its knowledge of import and export duties in the destination country before recommending a course of action to reward. The payments made by reward for security consultant services may amount to bribe. Corruption and bribery are designated categories of money laundering offenses. So decline this. Yeah, we have mentioned most of the things, ladies and gentlemen. I think we are okay. Now, with your permission, if you guys have gotten, it's about high level. My role, ladies and gentlemen, in these last mile classes is not to give you lots of information. My role is to come and motivate you and show you that this thing is doable. It's all about how you defend yourself, how you think about broadly, audit procedures, how you think about the controls, etc. And you're going to like this as we progress. So then I'll be able to move to another question, which is September 2021, question number 3C. September 2021, question number 3C. Oh, time is up. Time is up. So this is our last question. September 2021, question number 3C. I think I took a lot of time to give that background information, but it's also good. It's also good, so I can't blame myself. September 2021, question number 3C. Have you gotten it? Have you gotten it? September 2021, question number 3C. Yes. So you're told there most auditing practitioners agree that legal liability is part of the risk associated with their work. However, they argue that practicing auditors may also take specific actions to minimize their liability. Evaluate the measures that auditors may take to minimize the possibilities of legal liability. So I'm so sure that one is something, ladies and gentlemen, will be able to do. One of them, which in this case here, you have to always ensure that you do very well. You must ensure that you do very well, because there could be a litigant outside there who is looking to get you out. It's documentations. You shall always have working audit files, the working papers. Document everything. They have told you this thing, have in this case here that documented, and of course you must have copies of those files because it's still them. Documentation. Thank you very much, Stanley. Proper client screening. Know your customer, KYC. Like amongst the things that I normally check, ladies and gentlemen, whenever I'm given a client, in this case here too, a prospective client, I will Google about the directors. If I go to case files, I'll be able to see the kind of cases they have. No, there are people who simply have a nose for going to court, for court cases. Once I realize that these guys are litigants, we call them litigants, we don't take up their jobs. Because at the end of the day, these are guys who want to squeeze again something out of my small audit firm. And we have just begun, few years old. All right. So know your customer. This guy is a great ninja. This guy is a great ninja. Know your customer. I love that. This guy is a great ninja. Nobody is talking about audit quality. Quality assurance should be top level, top notch. Quality assurance. I have not seen anybody talking about disclaimers of liabilities. Include a disclaimer of liability to third parties in the wording of the audit report. Of course, those disclaimers may not entirely eliminate litigation possibilities, but you see, I've always seen, like for example, when somebody comes to your offices and then they get like a notice that the floor is slippery, you need to watch, that you're parking this car at your own risk. You know, their clients, when they see that those kind of cautions, if something happens, they may not take you to court on the basis of that. They may think that their cases will collapse. So it's good to put those cautions. Put those cautions, ladies and gentlemen. Put them there. Yeah, like continuous training, take indemnity, insurance allow that. Proper planning of audit, and we shall be doing in this case here, audit planning. Observe independence, yes. Observe independence, yes. Observe independence. Understand the client's business. Don't get into auditing a school and you don't understand that industry. If you get into an industry that you don't understand and you don't partner very well with others, you will get yourself in court. Understand the client's business. Thank you, ladies and gentlemen. That is enough for today. See you tomorrow. Bye. Yeah, usage of external experts. I love that. You guys, you are going to pass. That one I can assure you. Thank you so much. Thank you so much. Thank you so much. See you tomorrow.